Hi everyone, my name is Ambrose Ebuka and welcome to our show You Too Can with Octa. If you missed the first episode, don't worry, you can always catch up. Here with me is my amazing trading mentee, Tolu. And unlike the live trading sessions we regularly hold on YouTube, this show is more personal. Together with Tolu, we'll cover the Forex basics, dive deep into the world of trading, and go step by step to achieve Tolu's goal of earning her first $1,000 with trading. Am I right, Tolu?
You are 100% absolutely right.
How are you, by the way? You haven't changed your plans on trading, have you?
Nope. Still intact.
How about friends, relatives, family? Have you told your friends and family about trading, about Forex?
Not yet.
Not yet. Well, I believe that in the course of this mentorship, I believe that there will be something fascinating that would just prompt you to tell your friends or your relatives at some point. Okay?
All right.
All right. So for today, we're going to be talking about trading platforms, how you can create an account. I'll go ahead and share my screen. So like I said, today we're going to talk about, different trading platforms or different types of accounts. And I'll also show you the Octa platform so that you can see how it works. And we'll discuss some of the tools that can help you make your trading journey easier. But first things first, we're going to start with the disclaimer and go straight into the trading platform. Any opinion, news, research, prices, analysis, or other presentation linked or other information linked and discussed in this training are provided as general market commentary and do not constitute investment advice. So what are you going to learn today? We're going to divide it into two sections. The first section, we'll talk about trading accounts, the different types of accounts and why you need a trading account. We'll also help you create your first trading account today. And would also have a Q&A session where you ask me questions if you have any before we move over to section 2, where we'll talk about currency pairs and Forex volatility and how you can understand the economic calendar, the usefulness, and we'll wrap up with a Q&A session as well where you ask me questions if you have any. So let me know, are you ready to dive right into the mentorship session?
I am ready.
We're going to start with trading accounts, right? What is a trading account? A trading account acts as an entry point for traders to engage in the Forex market where they can trade various instruments. Now, in our last episode, we talked about the various instruments and assets you can trade in the Forex market. So your trading platform is a software interface that provides Forex market access. Now, each platform has its own set of tools, like we have MetaTrader 4, MetaTrader 5, and the Octa Trader, which I'll tell you about. So MetaTrader 4 and MetaTrader 5, it's from the same MetaQuotes company, but Meta 5 has, more features, more indicators, just generally more features than MetaTrader 4. Now, just think of it as a manual car and an automatic car, where MetaTrader 5 is the automatic car and MT4 is the manual car. Okay, that's just like a simple analogy. And then we have the Octa Trader, which I'm also going to tell you about. But before I do that, let me also tell you why you need a trading account. Okay, why is it important for you and for us as traders? First, to unlock trading instruments, right? Again, we talked about these instruments in our last episode where we discussed EURUSD, GBP, JPY, other metals, and digital currencies as well. And for you to have access to trade these instruments, you need a trading account. You'll also get access to trading platforms like, again, MT4, MT5. Your trading account is created with your login information that you would use to log into MetaTrader 4 and MetaTrader 5. Now, for this MT4 and MT5 softwares, you would have to download them from the Octa website and log in with your information that will be provided when you create a trading account. And also to take advantage of leverage. Now, we discussed leverage in our last episode. Do you remember leverage, two-edged sword? Do you remember leverage?
Yes, I can remember.
Okay,
yes,
so you can get access to brokers' leverage when you create a trading account. Okay, because leverage can magnify profits as well as risk. It requires careful risk management. So we're going to have a session where I talk to you about risk management, and everything about leverage and minimizing risk would all make sense when we get to that episode. But before I go further to talk to you about the Octa Trader app or the Octa Trader software and platform, do you have questions concerning this trading account?
No, so far.
All right. So let's talk about the Octa Trader trading account. Now, remember I told you MetaTrader 4 and MetaTrader 5 has to be downloaded as a software to your PC or as an app to your phone, and you then log in with the information that is provided by Octa when you create a trading account. But with the Octa Trader, it's fully web-based. You don't need to download any additional software to use it. You just simply open the Octa Trader web platform in your browser and start trading. But first, remember, you have to log into your personal account and you can connect to your web trader platform after you log in your dashboard. Okay. So what are 5 interesting things that you need to know about trading accounts? The first one is the difference in account types. Okay, Forex brokers may provide various trading accounts to cater to diverse traders' profiles. The most popular ones are real and demo account. Now, the purpose of having a demo account is because it's something they call test the waters, right? So when you want to learn a strategy or learn something about trading, you can start on a demo account and see if it works for you, see if you can practice properly on that demo account before going to a live account. The demo account is risk-free, even though you're not going to be making any profit. So if you make a profit, you can't withdraw the money. You can make a profit, right? But you can't withdraw the money. The same way, if you make a losing trade or if you lose a trade, it doesn't affect you. But the main purpose of a demo account is for practice, right? To practice and practice properly before you move to a real account. We also have deposits and withdrawals, where traders have several options for making a deposit in their Forex accounts, including electronic payment systems, digital currencies, bank transfers, debits, credit cards. Usually the same payments options are valid for withdrawals. Octa has also USDT, which is Theta, Neteller, Skrill, and what we call instant bank transfer, where you can make your deposits in minutes and also make your withdrawals in minutes as well. We have commissions and spreads, which is also an important thing you need to know about trading accounts, because there are brokers that have high spreads, which you don't want to use, because the spread is the difference between the ask and the bid price, and you want to take advantage of the low spreads and the tight spread that Octa provides. Also, Octa doesn't charge any commission on your trades or any swap fees at all. With Octa, you can trade without any commission or swap fees or any extra fee of any sort. So these are some of the interesting things you need to know about trading accounts. We have regulation and security as well, where reputable brokers are subject to financial authority regulation, which guarantees a certain degree of fund security and ethical trading activities. And Octa is also regulated by SISEC. You can check the Octa website for more info about the regulations. We also have risk management tools as well. You need brokers that give you the opportunity to utilize stop loss, take profits, utilize risk management properly, and also stick to those your preferred price of stop loss and take profit. A trading account must be opened when registering with a broker, supplying the required financial and identity documentation, and occasionally meet other conditions that are set down in the broker's policies and regulations. So do you understand the things about why a trading account is important for you as a trader and for us that use it?
Yes, I understand.
Okay, so now we're going to create a trading account for you. I'm going to have you share your screen so that I guide you through the process, because theory is very good, but practice is a lot better. So we're going to help you create your trading account, and we're going to do this with the Octa website. And for everybody watching right now, you can go ahead and sign up on the Octa platform and create a trading account together with us. So Tolu, you're going to go ahead and share your screen right now.
So let me know if you can see my screen.
Yes, I can. So you want to click on open accounts or sign up.
Account.
There's sign up at the top right, or you can use open account. Anyone works. Now, you can either put in your email and password, right? Or you can just click on Google. I'll show you a faster way to do it. You can click on Google and just log in through your already existing email address, right? Then so you can go ahead and provide your details, your phone number, your date of birth. Do you have any experience in trading? can fill in the checkbox that confirms you're not a US citizen. Except you are a US citizen, then you don't need to click that. There's also a tab or a link that explains the checkbox.
Do I have an experience in trading? Like,
when you
have I
started, you
traded
said
before?
you traded crypto, yeah. So, you can still call that an experience, even though you're starting to get into the world of Forex, but at least you know some things about charts, the way they move, and for crypto. So I'm just going to introduce you to Forex itself.
Yes, I'm clicking on continue.
But your experience is kind of like a beginner type of experience. So it depends.
Yes.
Do you think it counts? Does it count as an experience?
Well,
Don't
experience
mind
is
me.
what
I'm just
was
trying to.
written
I'm
there.
just. It counts.
Experience is
It
what was
counts. It
written there.
counts to an extent. So you can go ahead and.
So,
So there are two options we have here:
yes.
standard and custom. Click on custom so I explain how it works for you.
Okay. Customize.
This one customize, yeah. So we have real accounts, we have a demo account. Now, these are the options. Remember, I told you we have MT4, MT5. You can see that MT5 has 230 instruments, which is more instruments than MT4. Can you see?
Where are you seeing that?
It's just here. It's down. You can see instruments,
Okay.
230. Okay. Yeah. Now we have Octa Trader, which is a recommended trading platform because you don't need to download any app. You just go straight from your browser. So we're going to click on that.
So it's already on.
If you want to go ahead, for the people watching, if you want to go ahead and create a real account now, you can. But for Tolu is a beginner. We're going to start with a demo for her, and then when we get to when she builds up a bit confidence and she's comfortable with the tools, then we can go to a real account. Yeah, so you can click on leverage.
Leverage.
So you can use you can click on 1 to 100. Starting balance, you can leave it at 5,000 and you just click on
create account.
Yeah. Fantastic. It's amazing, isn't it? Congratulations, Tolu. You've made your first step on becoming a real trader. And for everybody watching, tell me, have you guys managed to open a trading account? You can let me know in the comments. Share your thoughts in the comment section.
Meet Octa Trader, an innovative trading platform with a cutting-edge analytical feed, all in one to help you reach your investment goals. With one trading flow across all devices. How to start trading with Octa Trader? Download the Octa Trading app and sign up. Now proceed to create your real trading account. And once it's ready, make a deposit. Choose suitable payment method and collect your deposit bonus. But before you start trading, explore Space, a customizable trading feed where you can select assets to follow and choose topics that suit your interests best. Find relevant ideas for your trading style and gain confidence in your decisions to trade with profit. Give instant feedback on trading ideas you like. Get to trading seamlessly from the feed and open an order in a few clicks. You can also set stop loss or take profit right away. Create your own strategy with other built-in tools like our indicators and our drawing tools. Create your pending orders precisely. Set the desired price. Edit or cancel at any time. All your trading statistics in one place. You can get notifications across all devices to be up to date on all relevant market events. Now you are all set for trading with Octa Trader. Start today.
While we get comments from the viewers, tell me what really influenced your thoughts to start trading,
Okay, so like I said earlier, trading fascinates me. It's interesting. I find it interesting. It's quite complex, but I actually find it interesting, and it can be a very good source of passive income.
Yes. Definitely. It can also be a source where you can create multiple streams of income from. You can build new businesses out of trading profits and etc. Okay, now with trading, there are some things that would influence your trading decisions, right? And we call those things economic indicators. Now, this is away from what you see on your chart. This is away from trading the candlesticks and all that, which I'll get to as we continue the mentorship training. But to understand the global view, to understand countries and their economics and, the stability or instability of their economy, there's something we call the economic calendar that tells you the strength and weakness of, different countries, different key events of different countries as well. So these are some of the things that you would likely keep your eyes on, while you're trading. You can go ahead and end the share screen. Okay, so before we go into the economic calendar, you're going to basically answer these two questions, right? And they're about the trading account that we just discussed. Why do you need a trading account, and what is a demo account? So let me know, why do you need a trading account?
Okay, so I believe you need a trading account because you need a platform to be able to trade or practice your trading, whether it is a real account or a demo account. And then you need, should I say, a broker that gives you leverage, gives you a low spread, or like you said, a tight spread.
Okay, that's a good answer. So what is a demo account?
Okay, so a demo account is like the opposite of a real account. It's an account you can use to practice. You don't run any risk using it, whether you make profits or you lose money or anything. You don't run a risk. It's just for practice to get to understand how the market works.
Okay, that's an amazing answer. A real account and a demo account, the difference is the demo account, you can practice. If you run a risk or you make an unprofitable trade, it doesn't affect you. If you make a profit, you can't withdraw, but the main purpose is to practice. Now, in this next section, we'll be looking at currency pairs, different types of currency pairs. We'll talk about volatility as well, and we'll look at the economic calendar. I'll just briefly explain how it works. Are you ready for the second section?
I am.
All right. So we're going to move into section 2, where we talk about types of currency pairs. We'll look at the volatility, the types of volatility we have, and talk about the economic calendar as well. Remember, I told you we use this to gauge strength and weakness of different economies for different countries. So, I gave you examples of currency pairs in the last episode. Now we're going to look at types of currency pairs, right? So we have the major currency pairs, we have the minor, and we have the exotic, right? So I'll just take them step by step and explain exactly what they are and give you some examples. So the major currency pairs are the most traded and the most liquid pairs in the Forex market. They consist of currencies from major global economies, including the US dollar. Now we have some currency pairs, some major currency pairs like Euro dollar, USD JPY, GBP USD, USD CHF, AUD USD, USD CAD, NZD USD. Do you understand? These are major currency pairs. And why are they major? It's because they are the most traded and the most liquid in the Forex market. What this means is that a lot of people are actively trading these currency pairs in the Forex market. We have the minor pairs, which are also called cross pairs or cross currency pairs. And they are the ones where the US dollar is not included. They are traded less frequently than major pairs, and they involve currencies from major economies other than the US. Now we have Euro GBP, Euro JPY, GBP JPY, AUD JPY, NZD JPY, Euro AUD, and GBP AUD. So you see that these are currencies from major economies that are not the United States of America, right? That's why you don't see the US dollar here. Do you understand minor pairs?
Yes.
Okay. And we have exotic pairs, which consist of one currency from a smaller or emerging economy and one major currency. So these pairs are identified by lower liquidity, wider spreads, and potential for greater volatility in comparison to major and minor pairs. The key note here is they consist of one currency from a smaller or emerging economy and one major currency, just like you have USD SGD, which is the US dollar against the Singaporean dollar or the Singaporean dollar or the Singapore dollar rather. USD HKD, which is the US dollar and the Hong Kong dollar. USD TRY, which is the US dollar and the Turkish lira. So you see that it consists of one major currency. Which one here is the major currency in USD SGD?
The major currency is USD.
How about here? Euro TRY.
Euro.
How about USD SEK, which is the Swedish krona?
USD.
How about USD ZAR, which is South African rand?
Still USD.
Still USD. Okay, so you can see that we have three types of currency pairs, which are the exotic, the minor, and which one?
Major.
And the major. Okay, it looks like you have a good understanding of the types of currency pairs. Do you have any questions?
No.
No questions. Okay, we're going to go over cryptocurrency pairs, right? Remember, you can trade currencies, and you can also trade digital currencies with your newly created trading account. And you can also trade cryptocurrencies with that account. And here are some of the pairs that you can trade: BTC USD, ETH USD, LTC USD, XRP USD, BCH USD, AVE USD, ADA USD, and Atom USD, right? These crypto pairs, these cryptocurrencies are paired with US dollar. Now, the currency pairs that include cryptocurrencies as one of the currencies in the pair are commonly referred to as crypto pairs. So we have currencies and we have cryptocurrencies included in the pair. They are commonly called crypto pairs in Forex trading. Traders can speculate on the value of cryptocurrencies relative to that fiat currency. What this means is that in this example, we have USD as the fiat currency. In some cases, you can also have Euro as the fiat currency. You can have GBP as the fiat currency. But the main idea is you're trading that crypto against the dollar, right?
Yes.
Okay. Now let's talk about Forex volatility, right? It's good that if you understand pairs, different pairs, crypto pairs, currency pairs, commodities, it's also good that you understand the volatility that comes with these pairs, right? So we have high volatility and low volatility. But before I explain that, let's look at what volatility is. So volatility in the Forex market is the degree of price movement of a currency pair over time. It's an indicator of the likelihood of the market to undergo significant price fluctuations in a brief period. Now, to simplify this, it's basically the movement of the market. And the market can either move highly or in a low manner, right? And by high volatility, we are seeing the market move rapidly because a lot of people are actively trading. There's a lot of buy orders and sell orders being made in the markets. You know, the market is moving in a volatile manner, wildly up and down. Now, for high volatility, currency pairs may see high volatility or experience more volatility after major economic or geopolitical events in the Forex markets. Currency values can fluctuate quickly and significantly in response to various events, such as an unexpected central bank interest rate decision or a geopolitical emergency. That's for high volatility. Low volatility, on the other hand, could be characterized by reduced trading volumes, market stability, or lack of significant economic news. Now, most times during odd hours or odd business hours, like say 11 p.m. in the night, you'd see in Nigerian time, you'd see the market just start to move slowly, create a lot of, doji candlesticks or low momentum candlesticks. You'd see the market just move slowly at these times. That shows reduced trading volumes. You can also experience low volatility during a lack of significant economic news as well, which makes the currency pairs to see little price movement during these hours. Again, late in the night, like 11 p.m., 10 p.m., this is the ending of the New York session. I would explain trading times and sessions to you so I don't, overwhelm you with a lot of information. But yeah, high volatility, low volatility. Do you understand what it means?
Yes, I do.
Okay, we'll take it one step at a time. And if you have any questions, remember that you can always ask me. And for those of you watching, if you have questions, use the comment section and we'll answer your questions, okay? So let's look at volatility in general, right? What are the important things you need to know about volatility? Volatility significantly impacts your trading strategy. For example, you can have low volatility, which is better suited for a certain strategy that includes range trading or scalping, but you can also have traders that will prefer to trade high volatile pairs or during high volatile market conditions, since they offer more trading possibilities for immediate returns. When I asked you about examples of instruments to trade in the market, you always mention commodities, and you know that commodities have high volatility, like gold has high volatility. Other commodities like US 30, NASDAQ, they also have high volatility as well. You see these metals like silver, you see oil. These are pairs that have high volatility, and then we'll talk about the major currency pairs in the market also that have high volatility. Another important thing you need to know about volatility is traders can employ instruments or indicators like the ATR, which is the average true range, Bollinger Bands, and some volatility channels. All these are indicators to measure and assess volatility levels. These indicators would allow you to determine whether the market is volatile and to help you modify your trading strategy accordingly. So just keep this in mind, because we'll have a section where we talk about indicators, some of the popularly used indicators, and you'd obviously see how you can utilize this to understand, volatility levels and improve your strategy accordingly. Okay?
All right.
Economic calendar. Tell me, do you have any idea of what economic calendar means? I mean, I explained it earlier in this session, so maybe you caught that. But what do you think an economic calendar is?
More like a calendar that shows the events going on in the economy or in an economy. Something like that.
So, but you know what a calendar, you're correct actually, but you know what a calendar means, right? Gives you the days of the week. Now, these days, most calendars will tell you this is what's going to happen today. This is a holiday period. 25th December is Christmas Day. 1st January is New Year. This Boxing Day, all those things in your calendar, right? Yeah. Now, if you just take the economic and add to it, it's just like a calendar that tells you this economic event is happening today. This economic event is happening tomorrow. And it doesn't just tell you that, it also gives you the reports after these events have been released, right? So let's say, for example, 25th December is Christmas Day. And on the night of Christmas Day, you see a calendar that tells you this is what happened in the world on Christmas Day. People were happy. People celebrated this way. People celebrated that way. That's just how the economic calendar works, right? After each economic event, it tells you, the reports tells you if the report was favorable to the economy or unfavorable to the economy. So if a Forex economic calendar is a tool that lists significant economic events, news releases, official reports, and other important indicators on a schedule that may influence the financial markets. One of the amazing economic calendars that I like to use is the Octa economic calendar, right? And you can find this in the Octa website, Analysis and Education. That's where you can find the economic calendar. I'll go ahead and share my screen right now and show you exactly how the economic calendar works. Okay, so to access the Octa economic calendar, all you have to do is to visit the Octa website, and you want to come down here to Analysis and Education. Under Analytics, you'd see economic calendar. I mean, there are other interesting tools that you can use here as well, like market information, economic calendar, Forex news, interest rates, holiday calendar. You can also use trading calculator. All these tools we'll discuss and have a conversation on them in the course of this mentorship. We'll have sections where I show you how to use all these tools. We're going to take it one step at a time. So the economic calendar basically tells you the events that we have for different times of the, can be the day, can be the month, can be the week. Octa shows you today, yesterday, tomorrow, this week, the previous month, next month, and you can even see for this month as well, right? So if you look, let's go back to, let's say, January, right? You see that we have different economic reports, and we also have the impact. Octa tells you the impact of this news. Is it going to have a low impact effect? Is it going to bring about low volatility? Is it going to bring about high volatility? Is it going to bring about medium volatility to the markets? Okay. Now, as a beginner trader, it's important to look at all these events, medium, low, high, all of them are important so that you can get the knowledge. As time goes on, you can start to filter them. You can use the Octa filter, which you can find here. You can just stick to medium and high. And as you get more confident with your trading and more knowledge from these reports to know which one you actually want to listen to, which one you want to follow up with the reports, then you can even modify and focus on only high impact events. And what happens? Octa shows you only high impact events. Now, if you look at the reports, you'll see that Octa provides previous report, which was from the last time the PMI was released on Kaizen services. The forecast, which is what investors and economists, analysts are expecting. And the actual, which is the report that was gotten after the news was released, right? So let's say, for example, we have ADP employment change on US. We've seen that the previous was 103, right? The forecast was at 115. And the actual is what?
164.
164. What this basically means is that the actual was greater than the previous, right? Can you see it? 164 is greater than what? 103.
103.
Now, to understand what each and every report means, you just have to click on it, and Octa provides an explanation. The ADP employment change is a gauge of the employment in the private sector released by the largest payroll processor in the United States, Automatic Data Processing Incorporation, ADP. Now, you've understood what this report is about. You've also understood who ADP is, what they are, what they do. Obviously, you can see that it measures the change. The report measures the change in the number of people privately employed in the US. Octa is also going to go ahead, as you can see here. Octa goes ahead to tell you a high reading is traditionally seen as bullish for the dollar, while a low reading is seen as bearish. Now, which reading did we have? High or low reading?
Yeah, we have high.
So, which reading? The reports came out. Did the reports come out high or low?
It came out high.
Remember that you're not looking at the impact. So when I'm talking about reading, I'm talking about the reports, not the impact. So the reports came out at 164. The previous reports came out 103. Is this report high or low? Do we have a high reading or a low reading? Exactly. And what did it say? A high reading is traditionally seen as bullish for the US dollar. Now, you don't want to trade the economic calendar or these reports in isolation. You want to compare and combine with technical analysis. You want to look at other currencies that are paired with the US dollar. For example, if you have news reports coming out on USD and you trade GBP USD, you want to check the reports on GBP. You want to see how GBP is you want to see the strength and the weakness of GBP relative to USD. You don't just want to go start trading buy because you're seeing that the reports came out high and a high reading is seen as bullish, so let me just start buying. You don't want to do that. You want to look at the currency that, you know, this domestic currency is paired with. You want to see if they're strong, if they're weak, what's going on with the economy of that country that has this domestic currency. And then you want to combine this with technical analysis, look for areas where you can get good buy or sell opportunities and hop right in. Everything I just said now, I would explain to you better with practical sessions in the course of this mentorship. Remember, we're taking it a step at a time so you can understand better and, you know, just improve your knowledge gradually as we go on. So tell me, Do you understand exactly how to use the economic calendar now? Let me know.
Yes, I do.
Okay, I'll go back and share my screen. Go straight into the. So now we've covered economic calendar, and you understand how it works. You understand this reading. Remember that after each session that we have, you need to come back and watch these videos. You need to also learn and practice what it is you've learned over and over again until the next episode. And even after the next episode, you're still gonna have to refresh your memory and make sure you have a great grasp of the Forex market as we embark on your trading journey, okay?
All right.
Do you have any questions for me?
No.
No questions. Perfect, because I have
No.
questions for you. What are the examples of exotic pairs? Think.
Okay, I can remember one.
Okay.
I know exotic pairs are a strong currency as the base and a weaker or an upcoming currency as the quote currency. So I can remember USD and ZAR, that's South African Rand, that's ZAR.
Is that the only one you remember?
I'm trying to remember. There's Euro, and I don't know if it's TRY or so. I'm trying to remember, but that's basically the one I can remember. But I know that exotic pairs are base currency is strong and code currency.
Base currency is always strong in any currency pair.
But that's the definition of exotic pair.
Well, you did great. At least you mentioned more than one, so that can go for examples. And your answers were correct. I think you said something about stronger and weaker currency, and that's not really a good way to define exotic pairs, right? So if you want to define exotic pairs, you're looking at one currency, which is going to be the base, and this currency is going to come from a major economy, a major currency, and you have another currency, which is going to be the quote, that's going to come from a smaller or an emerging economy. So just like you said, USD-TRY, you can see that USD is the major one, is the major currency, stronger economy, and you have an emerging economy like the Turkish lira, rather. You have Euro-TRY as well, Euro, stronger, Turkish lira, emerging and smaller. So you're correct, actually. I'll give you that. Congratulations. Second question, what are the types of volatility?
I don't know if I can remember, but I know that high and low. Am I right?
You just said,
I know there's something about high volatility and then low volatility, but I don't know if those are the types.
Okay, tell me, what do you think? So you said high and low, so just make a wild guess, right? What do you think would be the types aside high and low?
I honestly cannot remember.
You just answered the question. It's high and low volatility. High volatility. Okay, tell me, what is high volatility?
So how do I explain it? I would say the market is moving at a very fast or high pace.
Yeah.
Where low is, it's a little slower or it's slow.
Yeah. You got the answers correctly. High volatility, there's a lot of participation in the market. The market is moving wildly in different directions. It can be moving in a certain direction, but moving wildly. You're seeing a lot of activity, and this can happen after major economic or geopolitical events or during. And low volatility, on the other hand, can be caused by reduced market volume when a lot of people are not active in the market, and this can happen during the close of business hours or during the lack of a significant economic event. Tell me, Tolu, we've come to the end of the second episode, and I want you to tell me what you've learned today. Just tell me how the session was. Tell me how you feel about this episode, really.
Yes, I learned a lot. Learned about how to open a trading account with Octa.
Yep.
learned about volatility, economic calendar, and it was quite interesting actually. It was quite informative. I actually liked it. It was wonderful.
Remember
So I'm
that
growing. I'm learning.
you're learning, and that's really amazing, and
Yeah.
you're learning really fast. You're learning really great. I like that. And also remember that when you get back, you have to practice what you've learned, and don't just go back and continue your, I don't know, Netflix. If you watch Netflix, I don't know what you do, but I
You
want
should
you
have asked if I do the Netflix thing.
Okay, so you don't do that. That's good. Because you would have enough time to actually practice and learn more about what we've discussed today. So today we discussed what trading platforms are, MT4, MT5, and the Octa trader as well. We also had Tolu create her first trading account. We talked about economic calendar and how the economic calendar can influence your trading. And I believe that every one of you watching, you learned something today, you created your trading account, and you also understood exactly how to use the economic calendar, right? Next time, on the next episode, we'll be looking at trading ideas and charts, and we'll be discussing some of the important, terms, important tools that every trader should know about. Okay, so are you excited about the next episode?
I am. Can't wait for us to start actually.
All right. So the next episode, like I said, we'll discuss ideas and charts and some really important terms that every trader should know in the Forex market. And while you guys are waiting for the next episode, you can always rewatch these videos, the first one, the second episode. You can always come back and watch and improve your trading knowledge. And you can also join the Telegram channel where you'd find access and tools to educational materials, videos and updates in Telegram, and you can also get to connect with like-minded traders, improve your trading ability, and be part of a trading community. Until then, thank you guys for joining. I'll see you guys in the next episode. And also, Tolu, thank you for this one. Remember to practice for the next episode because it's going to be about charts and ideas. And I want you back here with a lot of knowledge and information ready to kickstart, okay?
All right, then.
All right. Thank you, everyone. And I'll see you guys in the next episode. Bye, guys.